I want to teach you some secret settings and combinations that nobody knows. You're gonna learn 2 trading strategies that are very accurate. Just make sure you watch this video until the end and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, let's begin with the first settings and trading strategy. We need to add 2 Keltner channels to our chart. So here we click on indicators and we search Keltner channels. We add this one, which is a built-in indicator on TradingView. We add 2 Keltner channels to our chart. And now we should give them some special settings. For the first Keltner channel, here we go to the settings of the indicator, and here in the inputs tab, here for the length we set it at 50, and here for multiplier we set it at 3.75. And then here in the style tab, for the colors, blue is okay, and we just increase the thickness of the line so they will be better visible on our price chart. Alright, we're done with the settings of the first Keltner channels, and now we go to the settings of the second Keltner channels. And first here in the inputs tab, here for the length we set it at 50, and for the multiplier we set it at 2.75. And then we go to the style tab, and here we change the color of the lines to red. And we also increase the thickness of the lines so they will be better visible on our price chart. And now let me teach you how you can find buy-sell signals based on these 2 Keltner channels that we have on our price chart. But before that, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to our indicators. For this trading strategy, we need to change the type of our price chart to Heikin-Ashi chart because it will help us to find the exact buy-sell signals that are happening on the chart. The blue Keltner channels are wider because we set the multiplier at 3.75, and the red Keltner channels are tighter because the multiplier is set at 2.75. We wait until we get Heikin-Ashi candles crossing above the blue line, exactly like what happened here, or having them forming above the blue line. When we have this situation, there is a very high probability for the price to turn and go down because this is considered an extreme level, and when the price is here or beyond this level, this shows that the price is very far above its average, and it is very probable to have turning of the price coming back to its average. So in the first step, we want crossing of Heikin-Ashi candles above this level or having and forming them above this level. In the next step, we wait for a red Heikin-Ashi candle to be closed below the red line, which happened here by the help of this candle, as you can see. This is where the sell signal is confirmed, and in practice we could enter a short position with the stop loss above the previous swing high. Please pay attention that Heikin-Ashi candles are also a type of indicator, and each candle is calculated based on open, close, high and low of the current candle and previous candle. So please pay attention that this closing of this Heikin-Ashi candle or opening of this Heikin-Ashi candle here is not the opening price of the market for this time period. When you got this condition and you got a Heikin-Ashi candle closed below the red line, your sell signal is confirmed, and then you enter a trade at the current price of the market. As I said, Heikin-Ashi chart is also a type of indicator because each candle is calculated based on the price. It just helps you to have a clear view of the market. So as I said, this closing price or this opening price are not actually the closing price of this time period or the opening price of this time period. And when you got confirmation of your sell signal, which is when we got a Heikin-Ashi candle closed below the red line, you open a trade at the opening price of the next time period. Alright, this was a short position setup, and for a long position setup, we wait for crossing of the Heikin-Ashi candles below the blue line or having and forming them below the line. In times that there is a high buying or selling pressure in the market, we can have a situation like this, having the candles just below the blue line for an extended period of time, as you can see. In the next step, we wait for a green candle to be closed above the red line. When this happened and we got a green candle closed above above the red line, the buy signal is confirmed and we can enter a long position with the stop loss below the previous swing low. I repeat this one more time because this is an important point about Heikin Ashi candles. The opening or closing price of the Heikin Ashi candles are not opening or closing price in that time period. Heikin Ashi candles are like indicators and they are calculated from the price. Heikin Ashi chart helps you to filter the noises and have a better view of the market movement. So when the Heikin Ashi candle is closed above the red line, your buy signal is confirmed and then you enter at the opening price of the next time period, which is not the opening price in this Heikin Ashi candle. These settings and trading strategy is more suitable in lower time frames for scalping and day trading strategies, because by the help of this setup, we try to catch the sudden and usually short-term turning of the price after being far above or below the average price. Alright, now let me teach you the second settings and trading strategy. To add the first indicator, here we click on indicators and we search Bollinger Band Width. We add this one, which is a built-in indicator on TradingView platform, and we need to change its settings. So here we go to the settings of the indicator, and here in the inputs tab, here for standard deviation, we increase it to 3, and then here in the style tab, for the Bollinger Bands line, we increase the thickness so it will be better visible on our price chart. Alright, now we need to add the second indicator. Here again we click on indicators and we search ADX, this one, average directional index, and we need to change its settings. So here we go to the settings of ADX, and first here in the inputs tab, and here for ADX smoothing we set it at 20, and for DI length we also set it at 20, and then we go to the style tab and we increase the thickness of the line so it will be better visible on our price chart. And in the next step, for the ADX indicator, we need to add a horizontal line here at 10. Alright, we're done with the settings of these two indicators, and now let me teach you how you can find buy-sell signals based on this trading strategy. As you know, Bollinger Bands is a volatility indicator, and in this indicator, which is built based on Bollinger Bands, this blue line shows the difference between the Bollinger Bands. So the lower the line, the tighter is the Bollinger Bands, and the higher the line, the wider is the Bollinger Bands. This green line here at the bottom shows the lowest contraction. So when this blue line is near to this green line, it shows that the Bollinger Bands are squeezed and the market is moving flat in a tight consolidation period. And ADX, as you know, is a momentum indicator, and it helps you to know when the market is trending and when not trending. When the ADX line is above 20, the market is trending, and when below 20, the market is not trending. We added a horizontal line at 10, and this is our benchmark. We want ADX line to be close to this line, this horizontal line that we set it at 10. When we have this situation, it shows a very flat momentum in the market, showing a tight consolidation period. So here, by the help of these two indicators, we are looking for the times that the market is extremely flat and tight, which gives the probability for breakout after that. For example, here you can see that ADX line is very near to 10, and here the blue line is very near to the green line, and together they are suggesting that the market is in a very tight consolidation period. When we check the price, we can clearly see that the price is squeezed here. Until now, we just know that the market is in a very tight consolidation period, and we have high probability of breakout. In the next step, we use price action trading to identify the breakout. For the tight consolidation period, we draw the support and resistance level, which is usually in the form of a rectangle or triangle, and then we wait for the breakout. Here you can see that we got a candle closed below the support level, so we got a downside break out of this tight consolidation period, and in practice we could enter a short position at this point with the stop loss above the range, and you can see how the price declined after that. If we get upside break out of the range, that would be a long position setup. These two indicators are not telling anything about direction. They are only helping us to know when the price is in a very tight consolidation period, which gives the probability of breakout and sharp advancing or declining of the price. For identifying the direction of the breakout, I recommend using price action trading as I explained in this example, but you can also use some momentum indicators like MACD. But this price action method is easy and gives you an early signal at the moment that the breakout happens. This trading strategy is more suitable on lower time frames for scalping and day trading, because by the help of this trading strategy, we are trying to catch a sudden and sharp movement of the price out of a tight consolidation period, which are basically short term and better identifiable on lower time frames. Please pay attention that this trading strategy or the previous trading strategy will not give you guaranteed signals. There is no trading strategy or method with 100% win rate. This is not possible, and losing positions are always part of the game. You just need to manage your losing positions properly so you minimize their effect on your trading account. There is a risk management strategy that is called 1% rule, and is one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.